Hello and welcome to the TTI Distribution Download, the podcast where we talk about all things happening in the world of electronic components with the specialists of TTI. And now, your host for the TTI Distribution Download, Paula Renfro.
Hey everybody, thanks for plugging in to the TTI Distribution Download. This episode, we welcome back Dennis Reed of Edgewater Research for Q2 market results. Hey Dennis, it was a treat to see you back in May at EDS. Before we jump into your report out, did you learn anything cool at EDS?
Paula, great to see you as well at EDS. And I know I mentioned, but kudos to yourself and the whole team for the breakfast. It was very, very well received. I know it's no small feat, especially new venue and everything else. So kudos to you guys and the whole team. But, in terms of EDS, always great to be there. Something like 35 meetings jammed across 2.5 days. So it's, oh my goodness,
It's crazy, isn't it?
beyond crazy. But yeah, I think, in terms of cool, I think that would be a stretch to say it was cool, and nothing against anybody in our industry. But yeah, I think the tone was more optimistic, let's say, than last year, where, last year in 23, everyone was kind of looking at the abyss where we were cyclically. This year, a lot of the meetings center to, we've got a firm grasp on where we are. We just, we don't really see a strong path forward through the rest of the year. So, maybe subdued was kind of the tone of the meetings, I think. But, there's always some intricacies of, individual one-offs and some moves with suppliers and things like that come up. But yeah, from a high level, again, I think it was better than last year where we were all staring at the abyss, but, kind of some head scratchers on exactly when or kind of what that recovery looks like.
Yeah, what to anticipate. What about other travels last quarter?
Yeah, so on top of that, was blessed to get invited to a leadership summit at one of the major distributors, so a chance to speak in front of one of the leading distributors, top 100 leaders, chat about the marketplace. So that was a joy as well. And then additionally spent some time at some of the local golf outings actually hosted by TTI. So I was at the Cleveland one, which was a great chance to come into our office into Cleveland and then just see some friends in the industry. So that was about it for kind of 2Q travel. Yeah, but no, it was all great. Yeah, a little golf.
Oh, it sounds
Some
good
work
though. A
stuff.
little executive chat.
Yeah, some work stuff mixed in, and only one mechanical issue, one weather issue, one missed flight. In a
And you stayed healthy, relatively healthy?
yeah, stayed healthy and yeah, so no, it was good all in all, and no health issues. That was good. So yeah, it was nice to be on the road. It's always nice to see people. I mean, that's the joy, I think, of EDS, regardless of the puts and takes of the industry. 35 meetings is 35 friends you get to see. Not even counting you and I didn't have an official one, but we had
Yeah.
time to catch up in the hallway, and it's great to be friends.
Couple times in the hallway, yeah.
So it's
That was
always
good.
fun to do that.
Cool. So this month in Market Eye, you published a market conditions report for Q2. Let's dive into that a little bit. You want to start with inventory lead time update?
Yeah, sure. So, I think, when we look at both the supply side and the demand side, it's going to be paint kind of a mixed picture, if you will, across the board. So when you look at the areas like an IP&E, I think we're seeing inventory levels normalize across that broad category of the IP&E side. I would say it's in a better relative space in the I. So in the interconnect space, passives are closer, electro is actually a little better than the passives. So, we're seeing at normalization for some of those categories or close to normalization in the IP&E space. But when you look into the semiconductor side of the house, there's still a lot more work that needs to be done with that. And I think we talked about this 90 days ago. Our thoughts on that, ultimately they kind of come back to the non-cancelables, the non-returnables, or LTSAs, or whatever acronym you want to do. But at the end of the day, there's still some work in the semi side to be done, clearing inventory. And I think when we look at the quarter, you could say, great, we've made some progress. But when we probably more importantly look forward, that clearing in the semi space, is the one I think that ties back to kind of that outlook at EDS, where people are kind of scratching their heads saying, boy, we think we've got the worst behind us. We just don't know what if there's a slope of the curve coming out of it the rest of the year, and if there is, and not just kind of flattish at these levels, what does that slope look like? And that's really tied to kind of the inventory and semis. I think when you get out of the supplier side and you start looking at the OEM space, the distribution space, and then the EMS space, OEMs, we did see them buck the trend a bit in the first quarter, and that's going to continue in the second quarter when you start to see the data. Some of that's a little bit of seasonality and then a little bit of it is skewed to some inventory being built ahead of some of these AI projects. So like not horrible in the OEM space. I think, it's encouraging, and we've been encouraged that, in 2Q, I think for compute, so mainly even PCs, which is a pretty subdued market, at least the order flow has been largely kind of seasonal. So that's some good news saying, at least you could say some of the components in the ODM channel and for PCs have kind of cleared. So yeah, so the OEM side bucked it a little bit, mainly on the back of compute, little seasonality. When we look at distribution in EMS and those markets that serve more of the long tail mass market, there's still work to be done in the two segments that you could see by and large, which is distribution and EMS. There was some progress, but more to be done. And the area that's harder to get a pulse on is kind of what the end customer inventory levels, and that's where it gets a little bit more qualitative versus quantitative.
Yeah, like the component inventory you're talking about.
100%,
Yeah.
100%.
So
You
not.
could.
Oh, I'm sorry. Go ahead.
I'd say go ahead. Yeah, you could pick an auto OEM as an example, and you could look at the inventory dollars. But if they're selling a $50,000 car, that's going to skew the results more than their components will. So it gets a little trickier to see there.
So not to put you on the spot here, but honing in just a little bit, drilling down, if possible, on your NCNR comment earlier. I think we talked about this last quarter, and it has been a topic on the show. NCNR, non-cancelable, non-returnable. Sometimes in the industry we call it NCNR. In the last 90 days or in your travels, have you heard any moves afoot to change those policies, to loosen those up?
Yes, great question. So, where we sit, even in the last 90 days, I think all of the previous product that was tied in these contracts has been delivered. And there is and certainly understandable. So, where we sit through the second quarter now into July, there's a lack of visibility. There's too much inventory. So, non-cancelable, non-returnables, long-term agreements. Right now, those, I don't want to say they're null and void, but they're not being utilized really across the board right now. And I think where it becomes, kind of an interesting one and when we if you look at the suppliers will or the component vendors will voice some concerns on their distribution partners that our distribution partners are not giving us visibility. And then you drill into that in the distribution, and distribution says, well, our EMS partners are not giving us a great deal of visibility. You dig into the EMS channel, and they say, well, our end customers are not giving us a great deal of visibility.
Yeah.
And then when you peel back the onion with that end customer, there is admittedly a little bit of fear around providing any type of significant visibility right now because one, product's available, two, they're over inventoried. But three, and more importantly, there is, I don't want to go as far and say a lack of trust because I don't think anybody has necessarily breached trust, but there is varying degrees of concerns at that end customer base. If they were to provide visibility, that product will be pushed on them if they need to revise forecasts. So, I think there's a little bit of maybe call it indigestion following up. And that's kind of where we are right now, where everybody's driving for planned utilization rates and things like that. Because in some cases that involves hiring and training and in areas like that where you need some confidence in the business. But when you look at that end customer, they're just hesitant because they feel like they were unfairly taken advantage of.
And they've still got inventory pains to remind them.
Exactly.
Yeah. Cool. Thank you for that. So last quarter, we also talked about the continued challenges to the growth of the electric vehicle market, not so much the hybrid. How did automotive and transportation in general do last quarter?
Yeah, great question. So I think, if you look at it where we sit from the year, so production, we had the global production number for this year pegged at about 87.5 million units, which was flat year over year. And I think the good news is through 2Q, we're really on track with that, which I think that's actually some relatively good news in light of interest rates, as you mentioned, some of the downdraft with EV. So the fact that global production hasn't changed with those two headwinds, I think is great. When you drive it down here to North America, and I'll just look at the SAR. Last year was a 16 million number, 16.1 this year. Again, going back 6 months ago, we said it was going to be 15 and a half to 16 million, and kind of where, if you look at the government data throughout the quarter, we've hovered in kind of that 15 and a half, 16 million. So that puts you in an overall end market kind of flattish year over year on units. So, I think at the high level, it's clearly been challenging for EV, especially for EV in the West and all the Western OEMs. But the flip side of that is the internal combustion engine vehicles have held in, relatively okay. So I think if you drill back and maybe a step even outside of just automotive with this, I think when we look at this, kind of where we are cyclically in this recovery, I feel comfortable saying, we're either at a bottom or really close to a bottom across the areas. But when you look at what this recovery looks like and you balance that inventory out, it's driven by an individual end market and individual suppliers within that, individual programs within customers. So I think when you take that example and you extrapolate it to the auto market, if your base case of growth in automotive this year, if it was just based on EV programs ramping, your year looks a lot different than a potential competitor that maybe missed this demand cycle with EVs and they were levered to the internal combustion. So, they're looking, relatively better than a competitor that, in theory, 18 months ago felt really good about their position. So
Because they're an EV.
correct. So I
Yeah,
think,
yeah.
that's kind of the puts and takes and kind of the lumpiness of the recovery that we're seeing right now.
Yeah, it's been interesting there. How about aerospace and defense? That's an important sector for us here at TTI.
Yeah, unfortunately, the world's not a safe place, and I don't want to make light of it, of any of the conflicts going on across the globe, but that has kept that market really, really strong.
Hmm.
So I think you've got two sides to that. You've got the stuff that is attached to missiles and bombs and things like that, and kind of the business that's been seeing significant upside as those inventories are being depleted and we're replenishing stocks and fighting multiple conflicts. So that side of the business has been very good. When you look at kind of the future state, and it's always contract and program dependent. I think you guys would know that better than anybody. But when you look at some of those programs around, whether it's on space with satellite or drone type capabilities, or even some of the cyber warfare, hypersonics, things like that, the work being done there and the order flow is strong. So I think, near term in that cyclicality, unfortunately, the conflicts in the Middle East and in Europe kind of drive that kind of cyclical side. And then the long term secular digitalization of the armed forces continues. And I think, you have the other kicker, which again goes back to when you look at it long-term secular, when you look at, a number of NATO countries since Russia has invaded Ukraine have pledged to spend their 2 or 2.5% of GDP. So again, you're going to get a, continued tailwind, I think, going forward as people start to meet those commitments. But at the end of the day, I think while it might be good for business, I think everybody probably would say, boy, we'd like to see some of these conflicts obviously come to an end.
Let's talk about AI. So you mentioned earlier, but can you explain also, as you kind of tell us where we are there, what you mean by, more specifically, the AI deployment buildup?
Yeah, so I mean, what's happened in AI has been phenomenal, and it's been really interesting to watch. And when I did our webinar for our partners, really highlighted the impact, and this is in particular for semis, that that, memory's had on overall growth rates, but when you strip memory out and you also strip NVIDIA out, it's a completely different story for the industry. So, to date, it has been by a lot of GPUs, and that's really bolstered the NVIDIA standpoint. Now you're getting to the point when it is extended beyond just some of the ODMs that are building and just the hyperscalers. You're seeing your large tier ones, your Dells or your HPs or people like that. They're starting to develop their own hardware offerings, right now largely based on NVIDIA's architecture. And they're having some success. So you've seen, I wouldn't call it that it's a massive global database. I think database build out somewhere that's benefiting. I think you're seeing it just kind of extend beyond just the CSPs and see some of those traditional OEMs that are introducing products and have some success with it. So, they are building, some inventory. And again, it's when you think, and I don't have great data on kind of the carrying cost of these things, but if you just look at a standard x86 server, I think in general, kind of the CPU content's like $6,000 or $7,000. NVIDIA platform, your GPU content becomes like 22,000. So even that trade-off kind of impacts, as opposed to just a widespread, if you bring in some GPUs, you have to carry that cost. So that's all part of it in terms of introductions. I think with AI, and I would make the same case, and I don't think our thoughts have changed here. I think AI is real. I think AI is going to be out here for a while, but I think, and I'm hesitant to say whether it's this year or next year or even the year after, but we're going to get to the point where we have this infrastructure in place and we actually need to make some money off of it. I think I read an article somewhere, I think it was in the Wall Street Journal, that there was north of $100 billion spent on AI deployments in the last 2 years and less $3 billion in sales aggregate.
Right.
And it's a new market, so you have to build the infrastructure. But I think at some point, you move from maybe the hardware deployment in earnest, and then you get into the solution, software, application, whatever you want to call it. But
The monetizing of it.
100%. And that's where, I don't know, you have 10 of the big guys, your CSPs, your major OEMs, they all have solutions. And then you see 90 startups come to the market. And, that math kind of plays out like it did in EV. Of the 90
Yeah.
startups, I don't know, maybe 40 of them get gobbled up, maybe 30 of them go under. And, then you have 10 of them that become multi-billion-dollar companies that none of us have ever heard of, where we sit, today in 2024.
And we have all this amazing computing power available to us as we go forward, and how much the AI and like you say, the monetizing of it will be interesting and fun to experience.
100%.
Okay, how about second half of the year? Here, let's do a little forecasting. I love it when I put you on the spot like this. Any reason to expect anything new?
No, I think, when I reflect, when we sat together 90 days or so, give or take, I described kind of 24 as a transition year, and I would kind of stand by that 90 days later. So I think it was kind of weaved throughout the commentary about EDS and kind of all these, call it non-AI markets. Still feel comfortable saying the worst is probably behind us. We've made progress on inventory, but there's still more work to be done. So I think, the way we're thinking about it, you'll probably see some level of recovery maybe in the interconnect side. But, when you look at semis and maybe the broader inventory, kind of flattish off of where we are in 2Q. Again, so not getting worse, maybe, call it flat plus or minus, right? You get maybe a little seasonal uplift in 3Q and maybe a little bit of seasonality in 4Q. And hopefully what we're really doing here is clearing the deck in inventory through the remainder of the year and setting us up for a good 2025.
Yeah, well, we'll look forward to that for sure. And you mentioned our breakfast at EDS, and thank you for the compliments on that. And, our theme, as you'll recall, was about the cyclicality of our business. Historically, markets fluctuate, and it's remaining informed and planning well, that makes the difference. So thanks to you for helping us do that and breaking it down for us today for sure. Chat again next quarter.
Absolutely. Looking forward to it.
Great, me too. Thanks to our listeners today for plugging in. If you learned something today, tune in next quarter when Dennis will be back and he will break down Q3 for us. Until then, you can follow Dennis' weekly digest and other subject matter experts at tti.com/marketing.
That's it for this episode of the TTI Distribution Download. For more information on any of the topics you heard about today, reach out to your nearby TTI branch at 1-800-CALL-TTI or visit us online at tti.com.